Hey everyone, and welcome Live in Ottawa. And in this week's episode, we're going to cover the construction rates climb across Canadian real estate markets. But first, show reel, hit it. We're continuing our look at the Canadian real estate market as we kick off 2022. The market in 2021 and the start of 2022 is a strong, brisk sales with high demand. Driven by both young families and people downsizing, the biggest roadblock to even a stronger market is the lack of available properties. And today we're going to see how construction rates are responding to the need of increased affordable housing. And Canada has already experienced issues with housing affordability before the pandemic. And demand outpaced supply across the country, resulting in a lack of options for people looking for a way to enter the housing market. And the pandemic highlighted the existing supply shortage as demand and prices surged. With continued high demand, everyone living in Canada is seeing housing prices increase. Moving to Canada or relocating within the country and purchasing a home seem even more out of reach for many young buyers and downsizers. The best way to adequately address Canada's housing supply crunch is to increase the number of available housing units. Fortunately, the construction industry is responding to continued rising demand and low interest rates by increasing new home construction. And that's good news for anyone living in Ottawa or anywhere else across the country. And the second quarter of 2021 saw the largest number of new home starts since 1977. And according to RBC Economics, there have been 260,500 new homes started in the past 12 months. That's a 26% increase compared to 2015 through the 2019 averages. And translated into more concrete terms, the increase represents an additional 53,600 units. And the total number of units under construction is at all-time high of 320,000. Seeing such a large number of housing units started is great, but when will they be done? About 75% of those new starts are multi-unit projects. Apartment complexes and other large properties take longer to complete than detached single-family houses. And RBC is already seeing completed units coming into the market and expects that the trend to continue throughout 2022 as larger units are completed and the construction of detached single homes continues. And completed homes has become a bit of a bottleneck in the Canadian home construction. Over the past 20 years, the time takes to complete new construction has dramatically increased from 9 months to 21 months. And the significant increase in home starts should still see more units completed as we head into 2022. The strong housing market with high demand fueling increased home starts bodes well for the continuation of a strong Canadian real estate market. But the complicated times we're living in continue to create potential roadblocks. While housing completions should accelerate as we move into 2022, supply chain issues could delay some of those projects. Timelines that had already increased may be pushed back further if raw materials become difficult to acquire. And there are several decreases in new starts in the third quarter of 2021, particularly in large urban areas. The Canadian Mortgage and Housing Corporation, CMHC, reported a 4.4% overall month-over-month drop in September. And this isn't a big surprise. Demand remains strong and home starts are still well above pre-pandemic numbers. But permit applications have dropped a bit, likely due to materials and labor shortages. So where are the new homes? While new construction increased nationwide, there were some surprises when it comes to the locations benefiting most. On one end of the large urban scale, the Toronto market saw only a small increase of 1.4%. On the other end, Montreal saw a 50% increase, and people moving to Ottawa had a 65% increase in housing starts to bolster their choices. Even more interesting was the strong growth in smaller Canadian real estate markets. Rural markets saw a 51% increase, in small urban areas a 33% increase, in median urban areas a 27% increase. While housing starts in larger urban areas were predominantly rental apartments, smaller areas saw more of a coveted single detached and other ground unit homes. And in Montreal, that was about 90% of the market. Not only are those homes in great demand, but they are also far quicker to build, making the market in the smaller areas very robust. The emphasis on rental units as larger urban areas doesn't quite reflect the overall demand. And those looking to enter the housing market do not benefit from these units. While they may help alleviate a portion of the overall housing shortage, they do not address the adequate supply of moderately priced homes for first-time homebuyers. Overall, the construction industry is working hard to address the booming demand for housing of all kinds. The construction boom should see more new homes completed in 2022. While the industry may be plagued by pandemic supply and labor constraints for a while, the strength of new home starts is a promising move towards easing the tight supply across Canadian real estate markets. So there you guys have it, construction rates rising across Canadian real estate markets. If you're thinking about making a move, feel free to reach out to us. Give us a call, shoot us a text, send us an email, even wrap it up in a bow and send it first class, because we got your back. We're moving to Ottawa or anywhere across Canada. And each and every week we're bringing brand new videos just like this one. So make sure to tap that subscribe button and click the bell so you're notified each and every time we do a brand new video. Till next time, take care. So there you guys have it, the construction rates rising across various Canadian markets. While the industry may be plagued by click the bell so you're notified each and every time we do a brand new video.